The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And I wanted to start the show today with Facebook because we have an incredible pattern there. I put it into Tiger TV. You'll see the UJB equals CD pattern that came out since the initial price offering came out. And you can see that looks like we're heading between $20 and $13 per share. 20 is the 1.27 expansion, but frankly, the ABCD with the gap and everything, and the fact that this last rally could only rally to the 382 is incredibly bearish, and so it does set up that it looks like it could be going to $13 a share. That doesn't mean that it's going to go there, but that's what the pattern is suggesting, and this is what we're dealing with. The reason why I chose the Facebook is because I was watching a little bit of the Olympics, and the thing that was really interesting for me to watch on the Olympics was the fact that we had the Chinese contingents for the contestants for the men's gymnastics, one of the greatest gymnastics teams in the world. They won a lot of gold medals in Beijing, and if you saw the thing, it was just a total disaster. The fellows couldn't even finish the routines. They either fell off the parallel bars, they fell off the rings, and what happened was the fourth alternate for the Chinese team, finally came on just to finish the program, even though it was a disaster, and he had an absolute incredible performance, nearly an almost perfect 10, and he was only 5'2", but the rest of the team just totally was demolished. And I guess Britain moved on to the thing, but it was the fact of failure. And we deal with this in our trading every day, folks. When you're trading, every time you have a losing trade, you realize that you're just that much closer to your next winning trade, because it's all about probabilities, and that's what we're trying to do when we're doing these things. Now, I believe very strongly about what I'm going to say here in the next 50 minutes or whatever time I have left here, because we are looking at, I believe, something very similar to what happened on March the 9th of 2009. That was the big bottom that we called. I called that the point of no return, and the title of my newsletter this week is The Point of No Return Deja Vu. We have the same similarities in the patterns occurring now. The Bradley model is beginning to turn. I suggested, getting short sometime today. I don't even want to wait till August 3rd. I know it's the old market adage, it's much better to be out of a market wishing you were in than in a market wishing you were out. But at this particular time, it looks like we are at a major turn here. Basil made a really good case, for the lagging in the stochastics and some of the other things that he watches. And as I understood it, they're lagging behind quite a bit. We're going to look at some of the other of these indices, like the small cap and the transportation index that I posted into Tiger TV. You'll see that it has 3 lower tops. It just looks like this thing has got so many things going for it that if it fails, I'm going to feel like one of the Chinese gymnasts. But frankly, if it works, then it's going to be, something like what we had in 2009. In 2009, my comment was that we're probably going to have the biggest short covering rally in 50 years, and it was the biggest short covering rally ever. I believed it lasted 36 months. In fact, we made the top, way back in April. But we are at that spot right now, folks. This is where you pay your admission price, because if you believe in patterns, and if you believe in stock market cycles, and you believe in the ratios, this is where the fat lady is singing, guys. I mean, this is it. There's no ifs, ands, or buts. If we close higher into next week, then all this is wrong. And but if it's right. And if it's right, it's going to make a lot of money, and probably very, very quickly, because the Bradley model turns down now, and it doesn't turn up for another, I believe, 8 or 9 months, not until the spring of 2013. So if this is the case, this is what we want to look at. But if you look at this, what's happened, over the past, 7 or 8 months of watching the Bradley model, you're able to see that the market has actually held up incredibly well into that June low. It actually bottomed on June 6th, which was a P-index date. And from that level, we had a tremendous rally. And the rally took us up to the exact 786 in the Dow Jones Industrial Average. Now, I'm going to repeat these numbers, and I'm going to put the charts in here because they're that important in my opinion, because you don't see stuff like this very often, guys. I mean, I saw this back in 2009, a few other times, July of 2010, and of course April of last year, and this is one of those times where everything is making such an incredible case for a top that it's just absolutely amazing. If we look at the Dow Jones Industrial Average, it's completed a 786 retracement from the April high. Okay, now the NASDAQ, which had been the leader. Remember, the NASDAQ had been the one that had been, running the show for a very long time. It had been the leader. Has now diverging, really, really badly. It is incredibly much weaker than. I'm having a little bit of technical problem, which for me is nothing new. Me and computers just do not. Oh dear. Hold on just a second. Boy, I mess up a one-car funeral. Hold on, folks, just a second. I'm trying to get I feel like a Chinese gymnast here, but I will get it right eventually. Oh dear. I don't know what I did wrong. Oh, shucks. Okay, now I think I'm getting closer to being right anyway. Maybe. I don't know. We'll put the numbers in here and see if I can get them to fit. But you'll be able to see here on the chart, and once I get it into Tiger TV, it's the NASDAQ, and we have hit the 7/8. Excuse me. That's good. Let's try to walk and chew gum at the same time. I'll slow down. The NASDAQ, and this is very important. It had been the leader all along. And now we've come up and we've hit the 61% retracement perfectly for the fourth time in the last month. And so this is very, very important. Now, if the NASDAQ turns around and gets really strong from here, then I will say this is probably going to be wrong. But right now, it looks like everything is lining up as nicely as it possibly can be. Now, remember, this had been the leader all along. It went up and, took out that 2,800 high, and the others, did not. And that was mainly because of Apple and Google and a few others. By the way, I don't know if you folks know this, but Google is actually a name for a number with 1 million zeros. I guess that's what they use in Zimbabwe to print their money with. But that's what Google means. It's a number with 1 million zeros. And I don't know if you guys remember this, but going back in the days of the hot .com bubble, Yahoo is an acronym for yet another hierarchical or official orifice. In other words, it was these boys from Stanford, making games with a number that turned out to be $1 billion company. But this is how they do these things, and many of these guys have made fortunes beyond the wildest imaginations of anybody. But we need to go to see where we're going to go with this, because we have the small cap index, which is lagging just as badly as the Dow Jones Transportation, is another indication of what we're looking at. So we have patterns, we have cycles, we've got divergence, we've got just about everything you could possibly ask for, that's telling you that this is the week that the market is supposed to turn down. Now, you got every economist in the world saying the market's going to turn up. And I have to respect them because they've got the PhDs. I don't have a PhD. I've got the Bradley model and a little bit of experience and some sometimes less common sense that I'd like to have. But this is what I'm seeing. This is very similar to what we are seeing when we had the bottom in March of 2009, in my opinion. The cycles are the same types of. They're just a little bit. They're not nearly as powerful as the March 9th of 2009 cycle. But on a scale of 1 to 10, they're a strong 8. So I would say that you're pretty close to that. Now, we have one particular index that, of the Dow component that has been a little bit stronger, and that's the one we've talked about several times, and that is the fact that the Dow Jones Transportation Index has been able to make a new high. and it is basically based on the people searching for income. Everybody's their income yield is what they're looking for. They do the same thing with the bonds. That's the main thing that they're trying to watch, and I think that's going to be an interesting one to go. In the second part of after we take our first little break here, I want to go into the main thing of looking at this bond market again, because I believe we've hit a major top here, and I'm really watching this rally back. If we can get a 61% retracement back, that's the one I'm going to be recommending that we finally jump on board the short train and see if the interest rates are going to go higher. Getting back to the failure and stuff, there was a really great quote that someone sent me this morning from Jack Lemmon, the Oscar-winning actor from the 40s, 50s, and 60s, and he said that it's not the failure that people are worried about; it's the fear of failure. And that's the one thing that Tony Robbins works on is don't be afraid to fail, because the only way you can go forward is to fail. And the analogy that I've always used is with your children. When they're learning to ride a bicycle, and they fall down, you don't say, oh, you'll never be able to ride a bike. No, you encourage them, you put Band-Aids on them, and pretty soon they're taking off, and the next thing you know, they're driving a car. So it's a matter of putting one foot in front of the other and keep going. This is one of the reasons why I do this show and why I work with TFNN, is because of the positive attitude that everybody that TFN has, which is fostered by our leader, Tom O'Brien, because he lives, bleeds and breathes this stuff. So it's very, very important. You have to have a positive expectation, but believe me, you're going to be wrong a lot, but you're going to be right sometimes, and that's the important thing in trading, is that you just keep on going, and you'll end up being on the right side of the market, and things will work out in your favor. So those are things that you've got to to keep in mind and know that what we're doing. Now, I wanted to show you about targets, because we've been talking about this for about at least 7 or 8 days now, coming into it for this week, and that is the fact that we've reached the perfect AB equals CD pattern in the cash S&P today. Went up to the 786 retracement up there at the 139 level. We backed off, a little bit. That level in the S&P cash, the S&P futures came in at, I believe, 1386. We're just about 8 points under that. So it started in the right direction. Whether it's going to continue or not, we'll have to wait and see. But this is the cash S&P. It's completed all the patterns that we're looking at. It bottomed off of that June 4th solar eclipse. We have the full moon on the 2nd of August, and it's really an unusual one, because it's actually between the 1st and the 2nd because of the GMT time. But today the moon is in perigee, which is it's close to the Earth, and many times that's a trigger. That's why I was suggesting get short this morning. Okay, we've got to pay a few bills. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. Larry Pesavento for TFNN, 877-927-6648. I had a request from a cowboy in Wyoming with the same name as I have, and he was asking about my setup that I have in my office for trading. I have two 42-inch monitors. On each of the monitors, I have 8 charts. On the 42-inch monitor on my left, I have the Forex market that I follow, which are basically the all of the majors against the U.S. dollar. In other words, the yen, the pound, the Aussie, the euro, the New Zealand dollar, Canadian dollar, and Japanese yen. And then on the other 42-inch monitor, I have the 8 commodities that I watch, which are gold and crude oil and soybeans and the S&P, the Dow Jones, the Treasury bonds. Those are the ones that I'm watching there. I don't watch the monitors all day long. And by the way, if you have a choice between the a 42-inch monitor and a 32-inch monitor, I would pick the 32-inch monitor. And the reason why is, and these are really high definitions, they're as high definition as you can get. But the problem is you get a suntan when you're sitting here. I mean, they're too bright, and I've toned it down even the best I can. I've got film filters on them, but actually a 32 inches is far better, I believe, for trading than the 42-inch. That's just my personal opinion. My data source that I have coming in is I have 3 different data sources coming in. I have CQG, Commodity Quote Graphics. I have eSignal, and then I have also a private one that is available through one of the firms that we trade through. But CQG is by far the best. They don't have any bad data. They do not have any bad ticks. That's the only service I've ever seen that doesn't have any bad ticks. But the cost is very prohibitive for most people. It runs about $1,000 a month for all the exchanges that come in. But it's really worth it. If you're doing professional trading, and stuff, that you probably need something like that. But for regular trading, like just if you're doing it yourself, trying to make a living, you can get by with eSignal or Interactive Brokers or things like that. As long as you get a good chart. And all these data sources are very close. Many of them, all the data comes from the Merc. That's how they make their money. And, they get it. It's just how quickly they get it and how quickly they clean the data and get it out to you is what the difference is. But they're very competitive. And as long as you can get a relatively good idea of where you stand with these things, you're in pretty good shape, for understanding, where the markets are. And that's what we're really trying to do. If you're really trying to make a living at this, the best way to do this is my opinion. And believe me, I've seen everything transformed in the last 50 years, because when I first started trading, I had a ticker tape from the Merc and I had a ticker tape from the Board of Trade. There were only 1,100 issues traded on the New York Stock Exchange. There were no stock indices, no bonds. We had about 22 commodities that we traded, and so things have transformed now that we're basically all floor traders. We can do the same thing, that we're doing. I enjoy watching, Basil's show because he's got so much good information there, and he really gives you an idea of where the support and resistance things are, and it's very helpful, as the other shows are too. And but frankly, Basil is a technician. He doesn't have any fundamental things. And that's what I'm more interested in, because I haven't had too much luck with the fundamentals, folks. So that's one of the things that I'm watching. Someone asked a question about the corn crop. The corn crop is basically damaged very badly. It's a question of now is how high the prices get. That will be based on supply and demand. If the weather continues to get really hot here, we're going to get a corn crop. The question of how bad it's going to be or how good it's going to be. But believe me, at the very end, don't be surprised, if there's going to be a big surprise that we come out with a little bit better crop than we thought. This happened in 74. This happened in 88. And, that's just the nature of the beast, because the emotionalism of these markets is no different than what we had when we had these markets that were going crazy, during, 99 and 2000 with stocks. I don't know if you know this or not, but Broadcast.com, which was the stock that Mark Cuban owned, on one particular day, right before it was sold to Yahoo for $4 billion, on one particular day, that stock had 1,000 points in swings. In other words, it was swinging 160 points, 100 points, 160 points. It did it 7 or 8 times that day. I saved the chart. I can't find it. I will find it. I know it's here somewhere. But I want to show that chart someday to show you the wildest action I've ever seen in my entire life. And what was so interesting is all of the swings were either at the 4 numbers that we look at. 618, 786 were the contracting numbers, and 1.27, 1.618 were expanding numbers. When we get back, we're going to talk about bonds, because we have to be ready. The fat lady is walking to the podium very soon, I believe.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks. 877-927-6648. I had a question about Facebook and why I was a little skeptical. And if you remember when Facebook came out this spring, we had talked about that several times during our show here. Steve and Tom had brought it up. Also, Basil had brought it up. The main thing I was watching is the fact that I was comparing it to what happened to Blackstone when it came out in 2007. I remember that very, very vividly because I was involved a little bit with that IPO. Some people wanted to buy it very heavily, and I told them, I said, please wait just a few days. I said, this is just a hype thing, and this was the same thing that was going on with Facebook. But Facebook was probably the most blatant of all of the things, and I think that's why it didn't do too well and why the stock has not done well. But remember, guys, the people that put these things out are the same people that bring us the Tickle Me Elmo dolls. I mean, these are the same guys. They just put a different name on the product, but that's exactly what they're doing. And the more hype that they have, the less chance of that stock, doing anything. And if it doesn't take off the first day, chances are that they overpriced it, and that's in fact what happened with Blackstone. The same thing with Facebook, and like I put into the chart for Facebook, it could very easily go to $13 or $14 a share on that AB equals CD pattern. That's all I'm referring to. With that, there's nothing more than that. I want to get to the bond market now because we have a very interesting pattern that is formed here. If you'll take a look when you get a chance from our low that we made down on June, right around the full moon and lunar eclipse of June the 4th. It actually came in on the 6th for the bonds. Friday's low was an exact 61% retracement of that low. Now, if we go below 149 in the bonds, right now they're trading 150.28. If we go below 149, that's going to change the trend in the bond market. The reason why I'm saying that is we've had the widest ranging down move in a bar since many months that occurred last Friday. Today we're getting a little bit of a snapback rally, and I'm watching this snapback rally to see what the retracement is going to be, because if we make a really nice 61% retracement, and believe me, that's way up there, and if it gets there real early in the morning, that would be the ideal situation. It's more than a point away, and believe me, a point in bonds is not very much anymore. I believe that you're going to see a spot there between 151 and 152 that is going to be, actually the number is it's almost 152 in the bond, so we're about a point and a quarter away, and so this is what we're watching for the bond market, to get ready to be short. And that's what my opinion is. Now, remember, guys and gals, don't want to make anybody feel deprived, or I don't know what the big word is, but anyway, this is what we're looking for. And I'm so bearish stocks that it is really scary. In matter of fact, if you're bullish stocks, it'd probably be better to turn off my segment of the radio show, because if I'm wrong. If I'm right, it's going to go down a lot, and if I'm wrong, it's going to go up into early August after next week, and then I'll certainly be wrong, and I'll eat a little crow, which I'm getting accustomed to that. If you eat enough garlic with it, it's not too bad. It's better than duck without garlic, so that's one good thing. Okay, now the bond market. Let's go back to why this whole thing is coming together. Now, there's a fellow that is quite popular on the internet. He's on TFNN. A great deal. His name is Doug Cass, and Doug is basically I don't know exactly what he does. He runs a hedge fund or something like that, but he's in the news quite a bit. Anyway, he's published something. If you'll just go to Doug Cass, Kass, and you'll probably they'll have his report there, and you'll see what he's doing. He does in 25 pages what the chart that we're looking at is doing, and that is the long-term Treasury bond chart that we've been watching for such a long time, going back 30 years. That came in up in that 151 to 154 area. So far, the high's been 153, but it has completed a major 30-year pattern, in my opinion. You don't see these patterns like this very often, but he goes through 25 different charts on why the interest rates are going to be going higher. A lot of these are related to fundamentals. I didn't understand them. I looked at them, but basically, I'm just looking at the price of what the bonds and notes are doing. And, so this is what, if you want to have a chance to go look at that, then I would take a look at it. We got a call from Tim in San Francisco. What can I do for you, Tim?
I was just looking at TZA, the small cap inverse. And just wondering what your thoughts are on where you think the market is heading. It looks to me like we're going to have a little pullback. It's pulled back. It's gone up a little bit this morning. There was a little pullback. IWM was up early, and now it's kind of given that up.
IWM and the small cap, I posted that into Tiger TV early this morning, and it is probably one of the more, in fact, it is the most bearish of all the indices that I look at.
Right.
And I think that we are getting ready to, TZA is the reverse of that. Is that correct?
Correct.
Well, then I don't know what the leverage of. I guess it's 3 times the leverage. Is that what it is?
it's a 3-time leverage.
Okay, so my suggestion is that I would be buying this because I really believe that the small caps, if you wanted to be really safe, I mean, if the small caps take out the highs that we made last week, I mean, that would be above 1390 in the S&P futures, then I would say you have something to look at. But this looks, I mean, I'm so bearish, Tim, like I said, I mean, I don't really have anything else to add, but I think this is the thing to look at. I mean, this is if you're getting 3 times leverage, and I don't understand these ETFs. Believe me, I've read about them, and I still don't understand them. I've looked at the relationships, and I'm just basically a futures trader, so the ETFs give me a little bit of trepidation. I do recommend them because they're very low risk, which is a good thing. But as far as volatility, I'm not sure what the volatility is in comparison.
Okay. All right. Well, thank you.
If you buy if you buy it today, I mean, the high today was, I believe, it's trading right now at 18.27. The low was 17.62, so that's 60 cents. So if you add another 20 cents on that and as a risk, so if you'd stop it at 17.40, then I'd say, Larry's wrong and move on to the next one. But right now, this has done everything. I mean, these markets have diverged. The cycles are there. The patterns are there. I know I sound like a broken record, but this is the time that you don't see these very often. This is very similar to what we had in, March of 2009 when I was, telling everyone that, I thought this was it. And there were very few people at that time were telling you to buy stock. And now I'm telling people to sell stock. So all I'm saying is it's just numbers, it's just probabilities, but this is what I see.
Okay. Well, I appreciate that.
It's my pleasure, Tim, and you live in one of the most beautiful places in the United States, San Francisco.
Yeah, I got the heat on. Pretty cold this morning.
Yeah, that's the famous quote by Samuel Clemens, the coldest winter he ever spent was a summer in San Francisco.
Absolutely. So,
yeah,
all right, thanks so much.
You bet.
Bye.
You bet. I lost a bet to my daughter. This is going back many, many years ago when she was at Berkeley getting her master's degree, and I told her the quote, but I thought the quote was from Ernest Hemingway, and she said, "No, Dad," she said, "it was Samuel Clemens," and I said, no, I think it was Hemingway. So she said, "You have to buy me $100 worth of books if I'm right." So we went into a bookstore, and in a matter of a few seconds, I was buying some books. Okay, now the longer-term picture that I put into the Tiger TV is what I'm basing this bearishness on, and this pattern that you're seeing over a 30-year period from 1981. And remember, 1981 interest rates, T-bill rates were 13%, muni bond rates were 16%. Those were tax-free. California muni bonds, they were called away a couple of years after that, but this is what I'm basing it on. It's really big. Now, I know you always hear about QE2 and QE3 and all the things that the Fed can do, but what people don't understand is sometimes these people make really bad mistakes that they cannot correct. I don't know if this is the case or not, but history says something really wicked is coming our way. I don't know what it's going to be. And that's what I'm assuming it's going to be, and we'll see into the future in just a few days. All I know is that if we close below 1365 in the S&P futures, the September futures, right now they're trading at 1380, and if we close below 1365, I would assume that pattern that we are talking about has completed this week, and this week is a Bradley date week. It's a full moon week. And we got a lot of things going on at that time. But the main thing is we've got all the patterns and all the ratios. And I really wasn't expecting the divergence. I really was not expecting the divergence that we're getting in the NASDAQ and in the transportations and in the Russell small caps. I was expecting a little bit more strength there, but we're not getting that. And that's another thing that makes me believe that we're very, very close to the point of no return, as I called it, in the letter. Now we should talk a little bit about the gold because we've had the big move up in gold. We broke out of that triangle that we've had that we've been watching for such a very long time. And what we want to be doing now is we want to take a look at where we think gold is going to go. Silver is still lagging badly, but we will still be able to find out where we'll be. I have to make one little change here on the time frame because I was watching gold from a hourly basis just for watching for support and resistance. And but on the daily, oh dear, I've got the. Hold on one second, folks. I have to refresh because I was traveling and I have a situation now where I've got to check some of my price supports that we're looking at, which were just fine. So I'm okay here. Yeah, we're all right. Yeah, we came right down into the support for gold, and we're right up against that 786 that we hit once before. And this is looking at the daily chart. I'll put this into Tiger TV so you can take a look at it. But we need gold to close above 1630. And if we do that, and we do it with gusto, in other words, if we come in and do it with a nice wide-ranging bar, with a long, long candle, what they call an engulfing line or something like that, that would really be a good idea. But we're up into the sixth day of a run. So any pullback that we get into the 1585 level in gold, I think would be a pretty good spot to look at it from the long side, because we've had higher bottoms in gold all along now since the end of May, and we had a higher bottom there. The first one came in at that near that magic point, which is 1522. That low came in at 1532. Then we made a 786 bottom again at 1555, I believe, where we're on the air when that was occurring, and then we had another bottom testing that 1555 again 2 weeks ago, and then we had another one last week, and it also tested the 1560 level. So all these higher bottoms are telling us that we probably have the potential for gold to be breaking out, and we need a really strong breakout above the 1630 level. And I don't mean just going up there and kissing your sister type break. I mean a break where it really gets up there and powers through, and ideally it would go above 1644, which was the high we made on the full moon and lunar eclipse back on June the 4th. So if we get above 1650, then gold would really be off to the races, and it's a short distance between 1650 and 1932 per ounce, which was the high that we made way back in I think it was September of last year. So this is what we're looking at in gold. Silver is still lagging badly, but it's getting better. We need to get it above 29 cents. It's roughly 28 cents right now, so it's holding its own, and so we'll give an idea. But frankly, the best trade that I see is the stock market, folks. I mean, that's got, like I said when I started the show, it's mother, God, and country. If you believe in these numbers, if you believe in these patterns, if you believe in these cycles, you do the trade, you put the stop in, and look for the best. Don't hope for the best, don't pray for the best, but look for the best, because hoping and praying are not very good trading words. They do not serve you very well. God does not answer the prayers for hoping and praying in trading. She doesn't do that. She makes you suffer through it. So just expect the best and prepare for the worst. That's all you can do, and make sure you have a stop in. And like I mentioned in the newsletter, if we're stronger, into next week, then most probably this cycle has certainly failed, and we'll be looking at something up to the upside, which could be good for everyone, I guess, and we will see. That's nothing more than another losing trade. It would be like the Chinese fellows at the Olympics that had such a disaster, folks. I don't know if you saw that or not, but it was. To look at the face of that coach for the Chinese who had won, they'd done so well in Beijing. I mean, these guys were expected to, to really clean up, and they just totally collapsed, one right after another. It was like unbelievable. Okay, we've got to take a little break here. We'll come back, wrap things up, and 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks. We're going to finish the show by taking a look at the crude oil complex. The oil looks like we're going to have a chance to make the $96 per barrel level. That's what the charts are telling us. We have had a pretty good rally in the gasoline futures. The gasoline futures, folks, you should really, if you believe in some of these patterns that we've been talking about today, the gasoline futures are probably the best. Well, they're all pretty good examples, but it gives you a really good idea of how the patterns work, because you'll see that the gasoline futures topped with a bearish butterfly pattern, back up at $3.40 a gallon. We went all the way down to $2.55 a gallon, and we made a beautiful bullish butterfly pattern at that point. And now we are in the midst of a rally that I think will take us up to about $3.20 a gallon, and that will be be another Gartley forming at the $3.20 a gallon. And here in Tucson, our gas is running at about $3.12 a gallon. And that's very, very cheap compared to California and back east, and I know other places, but here it's quite inexpensive given other parts of the world. I want to end this show, folks. We've only got a few more minutes, but the importance of what we're looking at in as far as the cycles that I started this show with. I believe that I believe it's this week. It could have been today with the moon at perigee. We have the the full moon coming in on the 1st in London, and then it comes in the 2nd here because of GMT time. So within a day or two of that, we might make one more jab up. But if we go below 1365 in the S&P futures, and I would assume that it's right. We've completed the beautiful AB equals CD pattern in the S&P cash to almost the exact penny. The Dow Jones Industrial Average made the exact 786. The small cap index could not even come even close to it. It just barely took out Friday's high. That hasn't even begun to move up, nor has the NASDAQ. The NASDAQ has tested the 61% retracement of the highs we made several months ago for the third time, and this should be leading the way. I mean, even with Google up 12 points today, it's not helping the NASDAQ that much. So this is what I'm saying. I can't emphasize enough how bearish I am here, and I'm as bearish now as I was bullish back on March the 9th 2000. I didn't have a radio show at that time. But that was an unusual time. But everything is here. I mean, the cycles, the patterns, the ratios, everything is here. So it might fail, and they do fail. But if they don't, then you've got a really good chance to really have a really good pullback. And how bad the pullback will be or what the extent of, no one can tell you, because no one can tell you whether the market is going to have a profitable trade or not, nor how much you're going to make. So you have to assume that as you let the market tell you, by each day as it comes down. The ideal situation is you have a really bad day in here this week. A bad day would be the Dow down more than 200 points. The more that it's down than 200, like it should happen to be down 400 points, then the whole band is playing, and then it's telling you that we are well on our way to looking at it. Please keep an eye on the bonds. If we rally up into this 152 level, remember we have the ECB and the Fed and the ECU. No, it's the Bank of England, ECB, and the Fed are all in the market with announcements for the next 36 to 48 hours. Thanks for listening to me, and may God bless.